Good morning, students. Welcome you all once again on the revisionary classes organized by Board of Studies of ICAI. Friends, today we are going to discuss Ind AS 38, Intangible Assets. And I can tell you, if you have read, if you have revised Ind AS 16, Property, Plant and Equipment properly and thoroughly, 50% revision or 50% preparation of Ind AS 38 has also completed, right? So whenever you read for exam, whenever you prepare for examinations, first read Ind AS 16 Property, Plant and Equipment thoroughly. Then you should go for Ind AS 40 Investment Property. Then you can go for Ind AS 38 Intangible Assets. Or after Ind AS 16, you can directly go to Ind AS 38 also, right? So these three standards complement each other, right? And if I talk about why these are the three chapters, three standard, but net the preparation is kind of 1.75 standard, because 1.25 standard is almost repeating. The concepts are repeating in each other's standards. Okay. And this standard Ind AS 38 intangible asset is again an important standard from examination perspective as well as real life perspective. So friends, in this standard, we will discuss the objective and scope, not much relevant, but yes, we'll focus on definition part. Recognition criteria we'll discuss. As I told you, there are 4 pillars of the accounting standards: recognition, measurement, presentation, disclosure. So every asset-based standard or a liability-based standard or income-based standard or expense-based standard, it talks about the recognition concept, measurement concept, presentation concept, and disclosure concept, right? Good morning, Shweta. Yes. So initial recognition and measurement. Then we'll discuss initial recognition means the first time when that item, that transaction is taking birth in the financial statement, in the books of accounts, how that item is going to be recognized initially. Okay. So that is initial recognition. And initial measurement means when you are first time recognizing any transaction, at what value you will measure that transaction, that is known as initial measurement. Then we'll discuss subsequent measurement also, and we'll discuss the mode of acquisition of intangible asset. Intangible asset can be acquired in multiple ways, right? So we'll discuss how the accounting will happen, how the measurement will happen when intangible assets are acquired in multiple ways, right? Then we'll discuss subsequent measurement concept, and we'll discuss amortization and useful life of intangible asset. Friends, when you are depreciating, when there is a decline in the physical asset, tangible asset, property, plant and equipment, it is known as depreciation. But when it is intangible asset, it is known as amortization, right? The concept is same. The only thing is, the nomenclatures are different. Okay. So friends, the objective with this standard talks about the accounting of intangible asset. This standard is applicable in all the intangible except few assets, all the intangible asset except few assets. Why? Because there are specific standards which are available for those assets. Okay. Definition. What is the definition of intangible asset? And this definition is very important. What is the definition of intangible asset? An intangible asset is a non-monetary asset. An intangible asset is an identifiable, non-monetary asset without having physical substance. Whether property, plant and equipment has a physical substance? Whether property, plant and equipment has a physical substance?
Yes.
Yes, sir.
Yes.
Whether intangible asset has a physical substance?
No, sir.
No.
What could be the example of intangible asset?
Goodwill, patent.
Goodwill, patent, software, copyright, right? So I'm teaching on my laptop. I can see my laptop, I can touch my laptop, right? So laptop is a physical asset, laptop is a tangible asset, it is a property, plant and equipment. But I can't see software which is running inside my laptop. I cannot see Zoom platform. When I'm saying I cannot see Zoom platform, I mean to say the utility I can enjoy, but from the software per se, I cannot see Zoom platform, right? that what are the queries which are inbuilt into that platform, so that I'm able to communicate I'm able to communicate, I'm able to engage with you people, right? So we are able to, we are able to interact with each other by using this Zoom platform. So this Zoom platform I cannot see, right? I cannot see in terms of the platform of the Zoom. It's not like that I'm writing the URL zoom.com and I can see that zoom.com. I'm talking about the entire infrastructure which is running this entire, Zoom platform. But yes, I can see my Lenovo laptop. I can touch my Lenovo laptop, right? So friends, the intangible assets are without physical substance. Okay. The telecom company has acquired a telecom license, right? And government of India has given the telecom license for 50,000 crores. And how they have given the telecom license? So they have given the right to operate in multiple states. And what they give as a license, they give a copy of a paper, the registration certificate, like registration certificate. So they give a license certificate. Can you see that? I can see, I can touch, I can hold my telecom license. Yeah.
No.
But you have that paper. You have that paper. You can see, you can touch, you can hold the paper. Can you see that? Can you say that since I can see paper, I can hold paper, I can touch paper, so this become a tangible asset, and I'll capitalize 50,000 crores of telecom license as a property, plant and equipment? Answer is no. Answer is no. So basically, what is important, what is prominent, what is significant that you need to look at? You got a software, you got a return filing software for rupees 15,000, and how the shopkeeper, how the vendor has given you the software. So the vendor has given you the software in a pen drive, in a floppy disk, in a compact disk CD. So whether it is a tangible asset or intangible asset?
Intangible asset.
Intangible asset. But you cannot say that, sir, I can keep that pen drive into my pocket. I can touch pen drive, I can see pen drive, I can hold pen drive. So the pen drive is just a storage media, right? A pen drive is one which is storing that entire software, right? So that software is a program. The pen drive is just 300, 400 rupees pen drive, which is capturing, which is storing, right? This 15,000 rupees of software. So you need to look at what is significant. So what is robot? Whether robot is a tangible asset or intangible asset?
Tangible asset.
Tangible. Tangible only, because whether robot is a tangible asset or intangible asset?
Tangible?
No, because it is run by a program, so it will be an intangible.
Yes.
So robot, see, what is significant in the significance of that robot? How the robot is running? The robot is running through a program, through a knowledge embodied in the robot. So yesterday night I told Alexa, please put an alarm for 6 a.m. in the morning, right? So Alexa told me alarm set for 6 a.m. Then when I woke up at 6, I told Alexa that please move this alarm by 5 minutes. So Alexa said that I have set up another alarm for 6:05 a.m. Then I asked Alexa, how's the weather outside? So Alexa told me about the weather. Then I asked Alexa, what's the temperature outside? What's the temperature? So Alexa told me the temperature. See, Alexa is that kind of a device which is there. But what is important in the Alexa? Not that device. The device is storing that entire program, but that program is important. Program is significant, right? So Alexa is able to answer my questions because the program, the query has been built into the Alexa in a way that Alexa will be able to answer my questions. So that is more like a machine learning. Okay. So in a robot, while that skeleton which you look at, that skeleton is just to give you a look and feel. But what is significant in that robot? The program is significant in that robot. The knowledge embodied in that robot is important, not the skeleton is important, right? So skeleton is just like a cover. Skeleton is just like a a storage kind of a device. So robot is an intangible asset. You need to look at what is significant. What is significant? So when you buy a laptop, you got the MS window also. So guys, can you please keep on mute? So when you buy laptop, you got a window also. So are you capitalize the windows separately, or you are capitalizing only laptop? Tell me, this is a very practical kind of a question.
Laptop.
Only laptop, right? Because that MS window is an integral part of that hardware. Okay, so you are capitalizing only laptop. But let's say if you will buy a window license separately, or if you buy an antivirus software separately, so will you capitalize them or not as an intangible?
Yes.
Yes, you will capitalize them as an intangible asset separately. So friends, an intangible asset is identifiable non-monetary asset without physical substance. Without physical substance, we understood. What is meant by non-monetary asset? Very simple. A non-monetary asset is an asset which is not a monetary asset. But what is a monetary asset? Can you give me the example of monetary asset?
Land and building.
Land and building is a monetary asset. Land and building is a monetary asset or a non-monetary asset?
Non-monetary asset.
Non-monetary asset. So you all agree that
Cash.
today is a revisionary
Monetary
class
asset,
of
cash.
industrial period. Sorry?
Monetary asset is cash.
Monetary asset is cash. Okay. So friends, this is a revisionary classes. So basically, if you want to enjoy these classes, at least you have to, either read the standard or listen the earlier classes. Then these revisionary classes will be beneficial for you. While even though if you directly attend revisionary classes, you will be able to understand few concepts in detail and few concepts with the help of the questions. But to get the maximum advantage, you have to cover up the old classes, then you have to listen these classes. That in that way, your preparation as well as revision both will go hand in hand, right? Yes. So talking about the non-monetary asset, see, non-monetary asset are those assets which are not a monetary asset. What are the monetary asset? Monetary asset are those assets which has to be received in a fixed or determined amount of money. Monetary asset are those assets which gives you a right to receive the money, the right to receive cash into the fixed or determined amount of money, into the fixed unit of currency. For example, debtors. You have sold goods on credit. What you will say? I have to receive this much amount from my debtors, right? So this is debtor are the monetary asset. Trade receivables are the monetary asset. Okay. Cash. Cash is a monetary asset. Cash पे लिखा होता है ना. I promise the bearer to pay 100 rupees. मैं धारक को वचन देता हूं कि मैं 500 रुपए अदा करूंगा, 100 रुपए अदा करूंगा. So that piece of paper, currency gives you a right to settle, gives a right to settle in terms of the amount, right? So that currency cash is a monetary asset. Cash at bank balance is a monetary asset. Fixed deposit, it is a monetary asset. Trade receivable, it is a monetary asset. Whether inventory has a monetary asset, inventory is a monetary asset.
Yes.
No, sir, because we do not know the fixed amount. We can either get NRV or cost. So fixed amount is not there.
Yes, inventory is not a monetary asset. Inventory is a non-monetary asset. Why? Because the inventory is lying into the godown or lying into the shop of the company. So let's say tomorrow fire will break out and it will destroy inventory. Do you have a right to receive cash? Right to receive fixed cash?
No.
Answer is no. But when you sold inventory on a credit, Whether you have a right to receive fixed amount of cash?
Yes.
Yes. Inventory is a non-monetary asset. Datas are the monetary asset, right? So when you sold inventory, it becomes monetary asset, but inventory is a non-monetary asset. Property, plant and equipment, monetary, non-monetary?
Non-monetary.
Non-monetary asset.
Non-monetary.
Because the company is running its factory. So the company does not have a right to receive cash from that factory, from the sale of the factory, right? But when the factory is sold and the company has to receive money from the buyer, that become a monetary asset. But property, plant and equipment is a non-monetary asset. Investment property, monetary, non-monetary?
Monetary.
Land and building are investment property. It is a non-monetary asset.
Yes.
Intangible asset, monetary, non-monetary?
Non-monetary.
Non-monetary asset. So an intangible asset is an identifiable non-monetary asset without physical substance. So intangible asset is a non-monetary asset without physical substance, and it has to be identifiable. What is meant by identifiable? An intangible asset is identifiable non-monetary asset without having physical substance. What is meant by identifiable?
Separable, matlab from other.
Separable. Very good. An asset is considered as an identifiable if either it is separable or it arises from contractual or other legal rights. Either it is separable. What is meant by separable? It can be separated from the other assets of the company. It can be separated from the entity, separated from the company, and it can be capable of being separated, means, or divided from the entity and sold. It can be sold, exchanged, leased, rented separately, licensed separately. Okay. So I can give you an example. A company is running its business for last 50 years. And due to the legacy of the company is running its business for the last 50 years, and due to the legacy of the company, right, the company has captured a market share of 80%. Means if that product is 100 pieces of that product is getting sold, 80% product belongs to this company. So this company has captured a market share of 80%, which is a big one. Okay. Now the question comes, whether this market share is giving the future economic benefit to the entity. Answer is yes. Whether this market share can be capitalized separately, I mean to say, whether this market share is identifiable. So the company wants to capitalize this market share. The company has done the business valuation, and the valuer told that, see, you have a market share of 80%. Due to the legacy of last 50 years, you captured a market share of 50%, and this market share has increased your business valuation. Now the question comes, this entity wants to capitalize the market share. So can this company capitalize the market share as an intangible asset? Yes or no?
No,
Answer is no. Why? Why no?
not identifiable. Market share is not identifiable.
Market share is not
Identifiable.
identifiable. Why? Because if this company wants to sell the market share, okay, so this company cannot sold the market share until and unless this company will be sold entirely, right? So market share cannot be sold separately. You cannot say that, see, so Priyanka, I'm selling you my market share, right? You cannot say that because you cannot control customers, right? So you cannot enforce customer. Okay. You cannot tell customer that, listen, now you have to buy all these products from Priyanka. You cannot say that. It is on the whims and fancies of the customer. They want to buy from me, buy from her, or buy from anyone else. Okay. So market share is not meeting the conditions. Market share is not identifiable because it is not separable. It cannot be divided from the entity. It cannot be sold from the entity. That is why internally generated brand, market share, goodwill, these cannot be capitalized because it is not meeting the identifiable criteria. These are not separable. So an asset will be identifiable if it is separable or arises from contractual or legal right. For example, the government of India has given a license. The government of India has given a broadcasting license of a program to a company. Okay. And this is non-transferable. And this program, the government has given the license to run this program for 5 years. So Ravi, can you please mute your video? Can you please stop your video? Yes. Yeah. So Government of India has given a license to broadcast a program to a company for 5 years. Okay. And this license, broadcasting license, is non-transferable. So this license can go to the other company if this entire company will be sold. Now the question comes whether this broadcasting license is an intangible asset. Can it be capitalized as an intangible asset? The company has paid for this broadcasting license.
Yes, sir.
No.
No, because it is non-transferable.
So guys,
It is not transferable.
while it is not transferable, there are two conditions. An asset is identifiable if it is separable or it arises from contractual or other legal rights. So the company has bought this license from Government of India under a contract, right? So this license gives a contractual or legal right to enjoy the benefit, right? So this will be capitalized as an intangible asset. So either it is separable or it is arising from contractual or legal rights, right? Or it is arising from contractual or legal rights. So yes, this is an intangible asset. So there are two separate conditions, right? And this separable condition is more from the perspective of, more from the perspective of internally generated intangible assets, more from the perspective of that, right? Clear? Is it clear or not clear?
Yes, sir, clear.
Second condition, please see second condition. The word is not and, the word is or arising from contractual or other legal rights. Okay. Yes. So friends, so the entity should have a control, the entity should have a, power. So the entity should have a future economic benefit. So these are the kind of, just concept. Now coming to the recognition criteria, we understood the definition of intangible asset. Intangible asset are non-monetary, identifiable, non-monetary asset without having physical substance. Intangible asset will be recognized when three conditions will be satisfied. What are the two conditions? Future economic benefits should be probable and cost can be measured reliably. Please remember, these two conditions for the asset will always be there. Which two condition? Which two condition?
Future economic benefit and cost should be
Yes,
measured
future
properly.
economic benefit and cost. Future economic benefit should be probable. So the company has purchased a machinery and Government of India has banned the output from that machinery. Now the machinery could be sold at a scrap value. The company will get a scrap value. So whether future economic benefit is there?
No.
Whether future economic benefit is there, but the company will receive cash. Company को पैसा तो आएगा. The company is not getting benefit economically, right? So future economic benefit is there. Like the intent of the company was to do a production, make a product from that machinery for next 10, 15, 20 year, whatever it may be, right? So the entity wants to receive the future economic benefit by selling the output or product from that machinery. But now machinery is getting sold at a scrap value. So this is not meeting the definition of future economic benefit, right? So friends, future economic benefits should be probable and cost can be measured reliably. The same condition was there in the tangible asset standard also, PP standard also. And hence the third condition was also given for intangible asset recognition criteria. It should meet the definition of intangible asset. if this third criteria would not have been given, then what happened? क्या होता?
It can be considered as non-intangible assets.
So if this third criteria would not have been given, अगर ये तीसरा criteria नहीं दिया होता, then for PPE recognition and intangible asset recognition, both have the same recognition criteria. Then people may take an advantage, or people may recognize that asset as a probably tangible asset or intangible asset, right? And that is why the future economic benefit and cost can be measured reliably. The same criteria of PP is there, plus one more criteria is there, that it should meet the definition of intangible asset. It has to be identifiable, it has to be non-monetary, and it is without physical substance. Okay. And all the intangible assets are required to be measured initially at cost. The intangible assets are required to be measured initially at cost. Okay. Friends, now we have entered into the important part of the standard. Intangible asset can be recognized through separate. Intangible asset can be acquired through a separate acquisition. What is meant by separate acquisition? You go to the market and bought a software, right? You applied for a license. You applied for a patent, trademark, copyright. So these are the separate acquisition. You are buying the intangible asset. Second, the intangible asset are part of a business combination. What does it mean? You acquire a company. You acquire a company and you got some intangible asset while acquiring a company. Government grant. The government has given the intangible asset free of cost or at a concessional rate. For example, the government has told, if you install your plant in the remote area, we will give you free airport landing rights. We'll give you free airport landing rights. Internally generated goodwill. Whether internally generated goodwill can be capitalized. Is it meeting the definition of identifiable?
No.
No. Yes. So internally generated goodwill cannot be capitalized as an intangible asset. It is prohibited. Internally generated intangible asset. Then there are some conditions which are given how to measure, how to recognize, how to capitalize internally generated intangible asset. Research phase, development phase. We'll talk about that also. And the last one, intangible asset can be acquired by way of exchange of assets. By way of exchange of assets. What is meant by exchange of assets? What is meant by exchange of assets?
Barter.
Barter, right? You are giving one non-monetary asset and you are getting an intangible asset. Or you are surrendering one intangible asset and you are acquiring another intangible asset. It is more like a barter, right? When intangible asset has to be separately acquired, at what value intangible asset is going to be measured? Cost includes purchase price plus import duty plus non-refundable taxes minus trade discount and rebates plus directly attributable cost. Plus directly attributable cost, right? You remember in PPE there were three boxes. If you have seen my presentation on PPE, you must have seen the cost includes three boxes. Purchase price including import duty and non-refundable taxes minus trade discount and rebate plus directly attributable tax plus directly attributable cost plus one more box for there. Which was that box? In PPE, the cost includes decommissioning, the estimated decommissioning cost as well. Estimated site restoration cost, decommissioning cost. You remember that?
Yes, sir.
Yes, sir.
But in intangible asset, the decommissioning cost is not there. Why?
When it is not having a physical substance, then why there will be a decommissioning of these?
Yes. So
Okay.
PP has a physical existence. Like when the company is installing tower, So the company has to dismantle tower, decommission tower. It is a PPE. But intangible asset does not have a physical existence without physical substance, without physical existence, right? So if somebody which does not exist physically, what you will decommission or dismantle, right? And that is why the decommissioning cost is not there in intangible asset, but it is there in the PPE, right? So, but these two boxes are typically same. What is the cost? It includes purchase price plus import duty plus non-refundable purchase taxes minus trade discount and rebate. What is meant by non-refundable purchase taxes? For example, GST. So GST input, if you got the GST input, if you get the GST refund, it is not part of your intangible asset cost. But if you will not get the GST refund, GST credit, it will become part of your cost of intangible asset. Plus directly attributable cost of preparing the asset for its intended use, right? What is meant by directly attributable cost? Like installation cost, engineer fee, professional fee, right? So these are the directly attributable cost. You remember I have told you one line, I have told you one concept of directly attributable cost. What is the concept of directly attributable cost? Simple concept. What is the concept of directly attributable cost?
To bring the asset from one place to factory, from the place of
No, that is the example. But the concept of directly attributable cost is if that asset would not have been acquired, the cost would not have been incurred. अगर आप इंटेंजिबल एसेट नहीं खरीदोगे तो क्या आप उसकी सॉफ्टवेयर की इंस्टॉलेशन कराओगे?
no,
नहीं कराओगे ना, करेक्ट? अगर आप मशीन नहीं खरीदोगे तो क्या मशीन की ट्रांसपोर्टेशन होगी? नहीं होगी. So directly attributable cost means had that asset not been acquired, the cost would not have been incurred. Simple. Okay. So these are the example of cost included, cost not included. So like cost of employee benefit, professional fee, testing cost, these are the cost included. What are the costs not included? Like brand promotion, launching a new product, advertisement, administrative and other general overhead. These are the costs which are not required to be included in the cost of intangible asset, right? These expenses are required to be charged to the P&L when it is incurred. Deferred payment credit. Just this is the same slide which we have discussed in PPE, right? The PPE, like PPE, intangible asset is also required to be recognized. It is also required to be measured at the cash price equivalent. For example, Prashant went to buy a Tally software. So Prashant asked, what is the price of the Tally software? So the shopkeeper told 50,000 rupees. Prashant told, I don't have money right now. I will pay you after a year. He told the price is 60,000 rupees. Right? So why he has increased the price?
Interest.
Interest. Because Prashant is delaying in payment. So Prashant bought that software on a credit basis, and this credit is deferred payment credit. Means he has deferred payment for 1 year. So he is not paying 60,000 rupees for the intangible asset. He is paying 60,000 rupees for two aspects. Number one is Tally software, which is intangible asset. Number two is interest. So likewise, when Prashant recognized that intangible asset in his books of accounts, so will he capitalize the intangible asset at 60,000 rupees or 50,000 rupees?
50,000.
Sorry?
50,000.
50,000 rupees. 50,000, right? So the intangible asset has to be recognized, has to be measured at the cash price equivalent. So the cash price equivalent is 50,000 rupees. The 10,000 rupees he will charge to the P&L as an interest cost. Okay. So it has to be recognized at cash price equivalent. Okay. But intangible asset, if the intangible asset is a qualifying asset, then
interest will be capitalized.
Then interest will be capitalized not as per Ind AS 38, it has to be as per Ind AS 23, borrowing cost. Right? So then Then comes to, business combination. We'll cover this business combination later on. So let's cover exchange of asset first, right? So for explaining the concept of exchange of asset, let me discuss one concept. One question, and through that question, I'll discuss the concept of exchange of asset. I hope the word file is visible to all of you. This question is from study material. Sun Limited acquired a software from Earth Limited. Sun Limited acquired a software from Earth Limited in exchange for a telecom license. So what is the intangible asset this company is acquiring? First talk about Sun Limited. First only talk about the Sun Limited. Which intangible asset Sun Limited is acquiring?
Software.
Software. Okay. Sun Limited is acquiring a software from Earth Limited in exchange for a telecom license. So what is the intangible asset which the Sun Limited is giving up?
Telecommunication
Telecom
license.
license.
Telecom license. So they are surrendering, they are giving up telecom license, and they are acquiring a software. Right? So we have to measure the software value, right? And this is on the barter. The company is not paying the cash. The company is paying in terms of telecom license. The telecom license is carried at rupees 5 lakh in the books of Sun Limited. And what is the WDV? What is the carrying value of the telecom license which is in the books of the company?
10,000.
5
5
lakhs.
lakh. 5 lakh.
5 lakh.
5 lakh rupee. 5 lakh is the WDV. It is a carrying value in the books of Sun Limited for this telecom license. Okay. The software is carried at 10,000 rupees in the books of Earth Limited, which is not the fair value. Okay. And what is the value of the software in the books of Earth Limited? 10,000 rupees.
10,000.
Which is not the fair value. So what is the beauty of this question? The beauty of this question is Sun Limited and Earth Limited. Here, both the entities are exchanging their intangible assets. Yes or no?
Yes.
Yeah. Sun Limited is acquiring an intangible asset, which is software, and surrendering telecom license. Earth Limited is acquiring telecom license and giving up software, right? So both the entities have an exchange of intangible assets, both the entities, right? So the license WDV is given in the books of Sun Limited. Software WDV is given in the books of Earth Limited, right? Pass journal entries in the following situations in the books of Sun Limited and Earth Limited. It is asking for passing the journal entries. Okay. In the following situations, and they have given some situations, and they are asking to pass the journal entries in both the in both the books of Sun Limited and books of Earth Limited. Fair value of software is 5,20,000 and fair value of telecom license is 5 lakh. Fair value of software is not measurable. However, similar telecom license is transacted by another company at 4,90,000. Neither fair value of software nor telecom license could be reliably measured. So there are three situations. So before solving these questions, let's understand the concept. Okay. Tell me, whenever there is an exchange of asset, at what value the acquiring asset has to be measured? What is
Fair
the
value of asset given up.
fair value of the asset given up? Very good. Very good. So why fair value of the asset given up is getting a priority? Why? It is consideration.
It is a reliable value in our books of accounts. It is
Okay.
Because if you sell the asset in market, we'll get the fair value, and that we are compromising to get the asset. So it is only the cost that we are incurring to purchase the asset.
So let me make your life complex. Let me complicate this. Let's say the asset which you are giving up, the fair value is given, okay? And the asset which you are acquiring, the fair value of that asset is also given. Now what happened? So you have both the fair values.
We will take fair value of asset given up only.
If both the fair values are given.
Then to given up only we will take, because we'll pay that amount to purchase. We are paying that amount to purchase the asset.
Yes. Just apply the logic. If you would not have exchanged this asset, if you would have buy that asset in cash, okay, ये जो software है, you are buying the software. The only difference is how you are paying. You are not paying through cash. You are paying through telecom license, right? If you have paid through cash, you are recognizing, you are measuring the software at the price which is given. And what is given? The fair value of the cash. And the fair value of the cash is cash price only, right? So when you are paying through cash, when you are paying a consideration through cash, you are measuring it at cash value. So when you are paying through a telecom license, so you would have to measure this acquiring asset at fair value of the asset given up, right? Because that fair value of the asset given up is the consideration which you are paying to buy that asset, right? So the first priority which has to be given is fair value of the asset given up. But what happens if the fair value of the asset given up is not there? Then what?
Fair value of the asset acquired.
Then you need to look at fair value of the asset acquired. What happened? If both the fair values cannot be determined reliably, neither given up nor acquired, then
Market value.
fair value and market value is one and the same thing.
Carrying value.
आपके पास जो एसेट आप दे रहे हो उसकी WDV तो होगी ना, because that asset is in your books of accounts. Yeah, the carrying value WDV of the asset which you are giving up, you must have the carrying value or WDV of the asset. Yes or no? Yes or no?
Yes, sir.
Yes. Simple. So whatever is the carrying value or WDV of the asset which you are giving up, that carrying value become the cost of the new asset. That carrying value become the cost of the new asset. Is that clear? Is that clear? So what is the first priority? What is the first priority? First priority. What is the first priority?
Fair value of asset given up.
Fair value of asset
Given up.
given up. This is the first priority. Right? सही है?
Yes, sir.
What is the second priority? What is the second priority? Fair value of the asset. Help me. Acquired. Fair value of the asset acquired. What is the third priority?
WDV.
Third priority is WDV or carrying value. WDV and carrying value is one and the same thing. WDV or, so let me write WDV only. WDV of asset what? Asset
Given up.
given up, right? WDV of asset given up. Any doubt? Any doubt? Any doubt here?
No, sir.
Okay. So now can we solve this question quickly? Yeah. You guys need to tell me the journal entries. So first we will pass the journal entry in the books of Sun Limited. Forget about the Earth Limited. So if these kind of question will come into exam, the best way to deal with these kind of question, first complete from one entity level, then they go to the another entity level. So first just think about Sun Limited. Forget about Earth Limited. Think about Sun Limited. So what Sun Limited has acquired? Software. Okay. What Sun Limited is surrendering, giving up? What Sun Limited is giving up? License.
Telecom license.
Telecom license. Okay. And the telecom license WDV is given in the books of Sun Limited. I'm not going to the Earth Limited right now. I need to pass the journal entries in the books of Sun Limited. Earth, I'll take care later on. So in the following situation number 1, fair value of the software asset acquired is 5,20,000 and fair value of telecom license asset given up is 5 lakh. What is the accounting entry?
Software account debit to telecom license 5 lakh.
Software account debit to telecom license 5 lakh. So software account debit because this company is buying software to telecom license, right? So to telecom license 5 lakh rupees. Okay. Is there any profit in this transaction? Any profit, any loss?
No, sir.
No? Okay. So the first entry is software account debit to telecom license. There is no profit, no loss. Second situation. Fair value of software is not measurable. So fair value of software is not measurable. In the first case, the asset acquired and asset given up both were given. But you have picked only fair value of telecom license. Given up. Okay. In the second scenario, fair value of asset acquired is not given. Doesn't matter. But fair value of telecom license is given, which is 4,90,000. What is the accounting entry?
Software account debit 4,90,000. Loss on exchange account debit 10,000 to telecom license 500.
Okay. So why you have credited 5 lakh in the telecom license?
Because we credit the carrying amount of the
Yes.
asset.
Because since you have to de-recognize the telecom license, right? And when you have to de-recognize, you have to of course reverse the carrying value. So it has been credited by 5 lakh rupees and the software is debited by 4,90,000 rupees, and the difference is this 10,000 rupee difference is the loss on exchange, right? So software account debit, loss on exchange debit to telecom license, right? Clear? Situation number 3, neither fair value nor telecom license could be reliably measured. So fair value of asset acquired and fair value of license cannot be reliably measured. Then
carrying value to software account debit 500 to telecom license 500.
yes. So if both the fair values are not there, then whatever is the carrying value of the asset given up, this will become the value of the asset acquired. So software account debit to telecom license at 5 lakh rupees, right? This is the carrying value at 5 lakh rupees. This is the carrying value. Okay. Now let's go to the Earth Limited. Now, Prashant, you need to answer for the first question. Fair value of software is 520 and fair value of telecom license is 5 lakh. I am talking about in the books of Earth Limited. So what intangible asset Earth is acquiring? Earth is acquiring telecom license. And what Earth is surrendering? Earth is giving up?
Software.
Now give me the accounting entry in the first situation, Prashant.
Telecom license 5,20,000.
Yes.
Software 10,000. To profit 5,10,000.
Very good. So what he has done, first of all, he has debited what he has acquired. So this company, Earth Limited, is acquiring a telecom license. Telecom license account debit to software account. And remember, the asset which you are giving up will always be credited in your books at WDV. क्योंकि आपको reverse करना है ना, उसको de-recognize करना है at WDV. So to software 10,000 and the WDV of software is 10,000. And always the asset acquired has to be measured at fair value of the asset given up. And the fair value of the software is 520. So telecom license account debit 5,20,000, to software 10,000. The balance will go to the profit, to profit on exchange of software to telecom license, right? Profit on exchange. Very good. Second, fair value of software is not measurable. Means the fair value of asset given up is not measurable. However, the telecom license fair value of asset acquired is measurable from the Earth Limited perspective. Then
So 4,90,000 then, and 10,000 for software and rest on profit.
so telecom license account debit 4,90,000, to software credit 10,000, to profit on exchange 4,80,000, right? This is the accounting entry. Third, neither fair value of software nor telecom license could be reliably measured.
Straight 10,000. Entry by 10,000.
Straight 10,000. Very good. So fair value, sorry, WDV of the asset given up. And WDV is 10,000. Telecom license account debit, to software 10,000. Right? So have you understood the concept of exchange of asset? Will you remember?
Yes,
Yes,
sir.
sir.
Yes, sir.
If in this question, if I will replace this software and telecom license with machinery and building, then what will happen?
Same entry, except instead of intangible, it will be PPE.
Very good, Abrakesh. Very good. So if this question will come into the exam, and you guys have seen this question in the study material, in the class also, in the earlier class also, when I have explained the class, detailed class, I have covered this question. I am in the revision class. I'm also covering this question because it is given by the Board of Studies. And you will also solve this question in the material. So you guys are prone to just look at intangible, software, telecom license, right? But in the question, in the exam, if this software becomes a building and this telecom license becomes a machinery, then life will not change. The concept remains same. The only thing is, instead of intangible asset, it will become a PP. Means जहां जहां सॉफ्टवेयर लिखा है वहां बिल्डिंग लिखी होगी, एंड जहां टेलीकॉम लाइसेंस लिखा है वहां मशीनरी लिखनी है, बस दैट्स ऑल. राइट? एग्जैक्टली सेम कॉन्सेप्ट. रिवीजन हो गया. पीपी का एक्सचेंज ऑफ एसेट का भी रिवीजन हो गया. Yes or no?
Yes, sir.
Yes, sir.
Is it done?
Yes, sir.
Okay, very good. So you're not required to, just open the Ind AS 16 again and then remember, then see exchange of asset concept in PP. It is cut copy paste. Okay. Yes. Now let me take you to the question number. So friends, in terms of, acquisition of intangible asset, mode of acquisition, we have covered separate acquisition, which is your cost. Cost includes purchase price plus import duty plus non-refundable taxes minus trade discount and rebate plus directly attributable cost. And we have covered exchange of asset concept also. Now, let's cover business combination. When you are buying an intangible asset through business combination. So let me take you to a question. Yes. Question number 5. X Limited is engaged in the business of publishing journals. They acquired 100% stake in Y Limited, a company in the same industry. Okay. X Limited paid purchase consideration of 10 crores, 100 lakhs, 10 crores. Okay. And fair value of net asset acquired is 8 crore 50 lakh. So this company X Limited is acquiring Y Limited. And this company is paying a purchase consideration of 10 crore. And what is the fair value of the net assets acquired? 8 crore 50 lakh. So the asset which they are acquired, that has a fair value of 8.5 crore, but they are paying 10 crore. Why they are paying 10 crore? Why they are paying 1.5 crore extra?
Goodwill.
Because of goodwill or some other intangible asset, right? Some other intangible asset. For example, if the company has a good market share, right? So whether the valuation will be more than the fair value of their net assets or not. Of course, yes. Business की valuation खाली asset की valuation से नहीं होती. You
Yes.
remember the Flipkart, when Walmart acquired Flipkart, the valuation of Flipkart comes out at 1 lakh crore almost, right? So and Flipkart is a loss making entity. तो और Flipkart के पास asset 1 lakh crore के नहीं है. But Flipkart has a platform. Flipkart was a brand name, right? And there was a lot of footfall for the e-commerce sale, for the online sale. There was a lot of footfall on the Flipkart at that point of time. I'm talking about 2019, 2018, 19, I'm talking about, right? So why they got the valuation of 1 lakh crore? Not because of the profit, they are loss making. Not because of their assets, they don't have such assets, right? So they have the asset, but they don't have the asset worth 1 lakh crore, right? But what they have a lot of intangible asset in terms of what? In terms of customer footfall, in terms of brand name, in terms of e-commerce market share, right? But they haven't capitalized those intangible assets. Why they haven't capitalized those intangible assets? Why? Because those were internally generated intangible asset and these were not meeting the identifiable criteria. These were not meeting the identifiable criteria. Okay. Clear?
Clear, sir.
Okay. Yeah. So these are not meeting the identifiable criteria. Okay. Yes. So now let's read further. The purchase consideration includes payment for the following as well. So Mr. Abarkesh, now for 1.5 CR, it is giving you more information, right?
Yes.
Out of 10 crore, for 8.5 crore, they have given you the information that was the value of the net assets. And they are saying that in addition to net assets, they are paying the premium. Why? Because of the following. Number one, 30 lakh rupee for obtaining the skilled staff of Y Limited. So when this valuation, when the valuation is happening by the business valuers, so after becoming a chartered accountant, you can also become a valuer, business valuer. You can just pass a valuation course and you will also become a business valuer. So when you become a business valuer, what happened? So you give all the weightage of what are the inherent features and benefits which is coming out from that business, right? So this company has a skilled staff. This company has a good staff, brilliant staff, right? And that is why they are paying 30 lakh rupees for obtaining the skilled staff of Y Limited. Okay. 50 lakh by way of payment towards non-compete fee so as to restrict Y Limited to compete in the same line of business for next 5 years. 50 lakh rupees this company is paying extra. You know why? Because X Limited told, don't do this business at least for next 5 years. You remember? The telecom company belongs to Anil Ambani. That Reliance Communication, Karlo Dunya Mutti mein.
Yes.
Yeah, have you heard about Karlo Dunya Mutti mein? In 2008, they have launched their, in 2007, they have launched 6 or 7, they have launched their, product, CDMA phone. So now after 5-6 years, Anil Ambani launch after 5-6 years or after 10 years. So they have started this thing, and after 5 years they have started this telecom company, Mr. Mukesh Ambani. So why they have started after 5 years? Why not along with Mr. Anil Ambani? Because of non-compete. Because of non-compete clause. There was a non-compete clause that Mr. Mukesh Ambani cannot do this telecom business at least for 5-6 years once this company was launched or when the product was launched. So there was a non-compete, right? And this non-compete agreement and non-compete clauses gives the benefit to the company, right? So they capture more and more market share. Okay. However, the above items A and B are not forming part of the net assets of 8.5 CR. This item number A and B, this item number A and B is not part of the net assets. The company has not capitalized this item number A and B. Okay. Determine how the above transaction be accounted by X Limited. Tell me how to do this. This is a question of business combination. This is a question of intangible asset acquired by way of business combination. Friends, if you have to acquire intangible asset by way of business combination, that intangible asset has to be measured at fair value. That is the only thing, fair value, right? Now, how to measure this intangible asset? Tell me. 10 crore purchase consideration paid minus 8.5 crore net assets. So now whether entire 1.5 CR will be goodwill or it will be some other intangible asset also. If answer is yes, it will be some other intangible asset also, then what is the value of those intangible asset?
Sir, non-compete fee will be 50 lakhs.
Okay.
So the value of goodwill will be 100 lakhs.
Why
out of
not?
100.
Why not for the skilled staff?
Because as per India's, we do not consider it as an asset.
See, for considering something as an intangible asset, you should have a control over that. You should have a control. So do you have a control on the staff?
No, sir.
Can you say that? So what is the definition of control? Control definition is you should have a power. You should have a power to enjoy the benefit from that asset or to restrict others not to get the benefit from the resource. So can you tell your staff that when you will put the paper, I will drain all your knowledge. I will suck all your knowledge because I have given you that knowledge. I have given you the training. I have given you the platform. I have given you the ample opportunity. And this is how you have grown up. And now you are joining a big company which is bigger than us and at a salary hike of 50%. So please come to me on the last day. I will drain all your knowledge. Can you say that? Can you say that?
No.
Can you say that this staff, whatever knowledge he has gathered, whatever knowledge you have gathered in your articleship, you have learned in your articleship. So whether your principal is saying that you cannot provide this benefit when you join the company, when you join the organization, answer is no. So whatever training this employer has given, the employee can benefit others from this training also. And the staff, the resource is not controllable resource, right? The resource can choose to resign and join anywhere else. So if the bond is signed, what the max he can do? Either he can serve the notice period or he can pay the money. That's all. But the company cannot say that, I will sue you and I'll take you to the imprisonment if you will not serve the notice period. Answer is no, right? So in this case, as rightly mentioned, that 8.5 crores. So what is my consideration which is paid? Purchase consideration. What is my purchase consideration? My purchase consideration is 10 crore rupees. It is 10 crore. Less. What is less? Less
Net asset acquired.
net asset acquired. What is the value? 8.5. 8.5 crore. What is the value? What is the value of my non-compete fee? Less. It is also required to be recognized at fair value. Less. Non-compete fee. What is the value?
50 lakhs.
50 lakh. What is the value of skilled staff? What
Not
is the
applicable
value?
here. Not
Sorry?
applicable here. Not applicable here.
Yes, not to be separately capitalized. Okay. So what is the remaining amount? What is the remaining amount? So what is the remaining amount?
1 crore. 1 crore.
1 crore. And what is the value of 1 crore? Sorry, what is the nomenclature for 1 crore? 1 crore has to be capitalized at what?
Goodwill.
Goodwill.
By what nomenclature? Goodwill.
Goodwill.
So goodwill is 1 crore. Yes. Goodwill is just goodwill is 1 crore, right? 10, 100 lakhs. Sorry, 100 lakhs. Yes. So have you understood this answer? Have you understood this? That asset acquired through business combination. Have you understood this? Yes or no?
Yes, sir.
Clear in mind?
Yes, clear in mind.
Clear in mind. Very good. So this is what it is written. X Limited should recognize. Let me read the answer from study material also. X Limited should recognize an intangible asset in respect of the consideration paid towards non-compete fee. However, amount paid for obtaining skilled staff amounting to 30 lakh does not meet the definition of intangible asset, since X Limited has not established any right over the resource and the same should be expensed. The entity has insufficient control over the expected future economic benefit arising from the team of skilled staff. Therefore, 50 lakh will be separately recognized as an intangible asset, whereas amount paid for obtaining skilled staff does not meet the recognition criteria for being identified as a separate intangible asset. However, since it is acquired as a part of business combination, it forms part of the goodwill recognized at the acquisition date. The value of the goodwill would be 1 crore, which is 1.5 minus 50 lakhs. Okay, this is the value of the goodwill. Is that clear? Is that clear?
Yes, sir.
Okay. Now let's go to the question number 2, right? And we'll discuss an important question through question number 2. Question number 2. Question number 2 is on internally generated intangible assets. Okay. So friends, let's discuss the concept of internally generated intangible asset. Then we'll come to this question. Okay. So what we have discussed separate acquisition. We have discussed exchange of assets. We have discussed business combination. So when it is separately acquired, it is measured at cost. When it is part of business combination, internally generated asset, intangible assets are required to be measured at fair value. So business combination में intangible asset को fair value पे करते हैं, separate acquisition में cost पे करते हैं, and exchange of assets में fair value of what?
Depending on what data given available.
Fair
First,
value of yes,
asset given up.
yes.
First,
fair value of asset given up. Then fair value of asset acquired. Then
and otherwise WDV.
Otherwise WDV of what? WDV of course of asset given.
Asset given up.
WDV of asset given up, right? WDV of asset given up. These three things are there. Now, what about internally generated goodwill?
We don't recognize it as intangible.
We don't recognize internally generated goodwill. It is prohibited, right? It is prohibited. Internally generated goodwill. What about government grant? Government grant को किस वैल्यू पे करेंगे? Government grant, like the government is giving airport lending right free of cost. Some licenses free of cost. Government says, please come to our street and install your plant into the remote area. क्या होगा? प्लांट लगा के क्या होगा? गवर्नमेंट को क्या फायदा होगा?
Development of that area. Employment.
Development,
Yes.
employment generation, standard of living will go up, right? People will get
Yes.
employment. The state will get the excise duty, GST, etc., income tax, right? So government will earn more, correct? And that is why the government is giving these intangible assets free of cost. So if the government is giving free of cost or rate at a concessional rate, at what value these intangible assets are going to be measured? So you need to apply Ind AS 20. And Ind AS 20 is giving you two options. Option number one, you can record intangible asset and grant both at fair value. For example, the government has given a import license free of cost, right? And for others, the government is charging 1 crore rupees. So what is the fair value of import license? 1 crore rupee, 1 crore, right? So what is the accounting entry for this license? At what value you will measure this license? At what value?
Fair value.
At fair value. But what is the accounting entry you will pass in your books of accounts? License account debit, 1 crore. What you will credit? What you will credit?
Government grant.
License account debit 1 crore to government grant liability 1 crore. Say the government has given a license for 5 years. So this 1 crore of license, which you have license account debited, you have recognized at fair value. So this license will be amortized over a period of 5 years. Every year you will have a 20 lakh rupee of amortization. And this liability will also be amortized over a period of 5 years. Every year you will get other income of 20 lakh. Other income of 20 lakh, depreciation of 20 lakh, amortization of 20 lakh. So net your P&L impact will be 0. And after 5 years, this license and government grant liability both will become 0, right? That is one option, that record license, record asset and government grant both at fair value. Option number 2, record the asset acquired at nominal amount plus expenditure incurred. So the government has given the license free of cost and the entity has not paid any amount of money. So at what value this license is going to be measured? At nominal amount. So what is the accounting entry? What is the accounting entry? You just need to pass an accounting entry with 1 rupee. License account debit 1 rupee to other income 1 rupee. Simple. Or the government has given license free of cost, but the company is required to pay only registration fee of 10,000 rupees. What is the accounting entry for this license?
License 10,001 to government grant liability. Same amount.
Then if the company is paying this money of 10,000, then there is no 1 rupee is required.
Okay.
1 rupee is only for the identification purpose, Abrikesh. For example, you are the auditor and the company has the 5 assets. Okay. 4 assets are acquired by the company and 1 asset is given by the 1 asset is received by the company by way of government grant. So when you will go for physical verification, how many assets you will find? 4 or 5?
4. Fifth is the intangible, no?
No. So let's say all the 4 you have bought. So basically, let's say there are 5 software.
Okay.
4 are the software which you have bought and 1 software which you have got free of cost, for example. So when you do physical verification, you will find this 5 software running on the 5 machines.
Yes, yes.
Hai na? This software will be having a separate serial number, identification number, whatever, query number, SQL number, whatever it is, right?
Yes.
So you will got 5 intangible asset. You will see 5 intangible asset when you will physically inspect. But in the books of accounts, since you have purchased only 4 intangible assets, there are only 4 intangible assets recorded in the books of accounts. So that is why the assets which the companies are receiving free of cost, the company is just for the sake of identification purpose, the company is capitalizing those assets at 1 rupee.
Okay.
But in my question, since
10,000.
the company has already paid 10,000 rupees for the registration of this license, so then why 1 rupee is required? The simple accounting entry is license account debit to bank account 10,000.
10,000.
Right? Okay. Is that clear? Government grant accounting clear? Yes?
Yes.
Yes, sir.
Now coming to the internally generated intangible asset. Friends, if the complex question will come and the question wants to test the theoretical as well as practical knowledge, most probably the question will come from this section in intangible asset. Internally generated intangible assets, right? So friends, just allow me 30 seconds. Internally generated intangible assets. And you know, this internally generated intangible asset, this is, if I talk about the industry in which this section of intangible asset is very relevant, are the pharmaceutical industry, are the software industry, IT industry, pharmaceutical industry. Okay. So when this COVID came, right? When this coronavirus came, all these pharmaceutical companies were doing a research. Research on what? Research on what? Vaccination. They were just finding, they were doing a lot of research to find what should be the antivirus for this coronavirus. Right? What should be the antivirus for this coronavirus? So they were just finding out that what should be the appropriate vaccine to kill this virus. They were just exploring to kill this virus, right? They were exploring. So friends, they were doing a lot of research. Okay. So when they were doing a lot of research, there were two aspects. So whenever a company is developing an intangible asset, so there were two aspects. Aspect number one is, number one is research phase. Number two is development phase. So the internally generated intangible asset has to pass through with the two different phases: research phase, development phase. What is meant by research phase? Research phase is a phase where the knowledge is acquired. Research phase is a phase where the entity was developing a knowledge, where the company was acquiring a knowledge, right? They were just applying a lot of permutation and combination, and they were acquiring a knowledge. And what is the development phase? Development phase is a phase where the company is applying a knowledge. In research phase, acquisition of knowledge is there. In development phase, application of knowledge is there. The company is applying a knowledge in development phase. In research phase, the company is acquiring a knowledge, right? So all the amount expensed in research phase is required to be recognized to the P&L, right? Research phase में अगर कोई भी खर्चा होगा, it has to be charged to the P&L, right? And whatever amount which has to be expensed, which has to be spent in the development phase, it has to be capitalized as an intangible asset. It has to be capitalized as an intangible asset under development, right? So, sir, पर development phase का हमें पता कैसे चलेगा, right? You understood from accounting perspective, research phase money, research phase spent has to be recognized in the statement of profit and loss as an expense. The development phase amount is required to be capitalized as an intangible asset under development. Is that clear? Is that clear? Yes or no?
Yes, sir.
Yes.
From the accounting perspective, just think like a horse. All the research phase spent is recognized as an expense. All the development phase spent has to be capitalized as an intangible asset under development. Right. Now the question comes, sir, how this development cost, how this development phase we will be aware of. Standard has given you 7 condition. Standard told you, sorry, 6 condition. That the date when this 6 condition will be satisfied, the development phase will start. And what are those 6 conditions? You remember I told about the pirates? I told about the pirate, the thieves of the sea. मैंने कुछ बताया था पायरेट के बारे में मेरी ओल्ड क्लास में. अब्रकेश, you were there. You were there, Abhikesh?
Not yes, but not recollecting right now, sir.
No problem. No problem. So there were 6 conditions which is there, right? What are those 6 conditions? What are those 6 conditions? So let me share these 6 conditions. I hope my Excel file is visible. Yes. Yeah. So research phase is acquisition of knowledge, development phase is application of knowledge. Amount spent in research phase shall be charged to P&L. Amount spent in development phase shall be capitalized. Development phase is considered to be started if following conditions are met. Pirate means future economic benefits should be probable, right? So from that development, from that internally generated intangible asset which you are calling, so from the development, the future economic benefit should be probable. Means, for example, once the research is over, that yes, now we got the solution, now we got the salt, that this salt has to be applied to prepare the vaccine for the coronavirus. Means now future economic benefit is probable. The company will receive the future economic benefit by selling the formula or by selling the vaccinations. Okay, vaccine. Intention to complete and use or sell the asset must be there, right? So future economic benefit is probable and the entity should have intention to complete the research, complete the development and to use or sell the asset. Okay, the company should have intention. Resources are adequate to complete the asset. At times what happened, the companies spent so much of money in the research phase that they are left with no money to do the further development. Okay, so resources should be adequate. If you have adequate resources to complete the asset, then it is one of the condition to the further development phase. Ability to use or sell the asset. So there was a private limited company. The private limited company was doing a lot of research for the COVID vaccine. So once they have identified the formula for COVID vaccine, right? And now, so they have got the visibility. Now they entered into the development phase. And till that point of time, the government has told that only COVID vaccine will be only sold by the government of India, not through the private players. So whether this entity is having an ability to use or sell the asset? Answer is no. They cannot. Correct? So ability to use or sell the asset must be there. Technical feasibility must be there. Technical feasibility means whatever the research you have done, there must be a technical feasibility to complete the product, complete the development. Expenditure can be measured reliably. These 2 conditions will always be there. Cost can be measured reliably. Future economic benefit should be probable. In addition to that, the resources should be adequate. Intentions to complete should be there. Ability to complete should be there. Technically feasibility should be there, right? If these 6 conditions will be satisfied, then you can say that. The development phase has started. Okay. For example, A Limited has started doing a research for a medicine on 1st April 2019. The company has spent 50 lakh till 31st May 2021. On 1st June 21, the company has met all the criteria for development and spent 30 lakh more till 31st March 2022. Explain what will be the treatment of this 80 lakh rupees. So what is my research phase? 1st April 19 to 31st May?
For
21.
50 lakhs.
Yes, 50 lakh is the research phase. This has to charge to P&L. The development phase started from 1st June, right? 30 lakh. It has to be capitalized. So if a company is not able to identify between the research phase and development phase, then treat it as a research phase and charge the expenditure to P&L. Okay? Charge the expenditure to P&L. Is that clear? अगर ये नहीं पता लग रहा कि रिसर्च फेज है डेवलपमेंट फेज है, in that case treat that as a research phase and charge it to the P&L. So probably you may got a question in the exam where a lot of theory was written, and it was written, one line was also written that the company is not able to differentiate between research phase and development phase. But what will you do in that case? Charge all the spend to the P&L. Now one part where the students are making a mistake. A Limited is developing a formula since 2019. The company has made 10 lakh rupees expenditure every year. In 2024, the company has found that the development phase was started in 2023 itself. But till last year, the company has treated that expenditure as a research phase expenditure and charged the expense to the P&L. Suggest the correct accounting treatment. What is the correct accounting treatment? You understood the question, na? Anyone who haven't understood the question? Mitali, have you understood the question? Priyanka? Mukesh? Sailesh?
Yes, sir.
Okay. So basically this company was developing a formula since 2019. And this company has spent 10 lakh rupees expenditure every year. Okay. 19, 20, 21, 22, 23, 24. In 24, the company has found that the development phase was started in 2023. Right. But the company has charged it to the P&L. Okay. And the company is treated that expenditure into the P&L considering research phase. So what should we do now? In the current year, we got to know that the development phase was started in the last year. What do we do now? Standard says that if you have recognized any expense considering it as a research phase, you cannot reverse in the future. Okay, you cannot reverse in future. You are not required to do anything. The expenditure charged on a research phase shall not be reversed in the future period. It is not required to be reversed in the future period. Okay, so whatever has been done, it has been done. So from the current year, the company will capitalize the development expense, development phase expense as a intangible asset under development. Okay. So now we will solve question number 2. It's 8:28 now. Let's have a 10 minutes break and we will start at 8:39. Okay. Then we will solve this question. Okay. Yeah. Question number 2. This is on internally generated intangible assets. Expenditure on a new production process in 20x12, 1st April to 31st December and 1st January to 31st March. So 2700 is the expenditure from April to December in 9 months, and from Jan to March it is 900. Okay, the total expenditure is 3600. The production process met the intangible asset recognition criteria for development on 1st January 2002. The amount estimated to be recoverable from the process is 1000. So it has met the intangible asset recognition criteria for development on 1st January 20x2. It means this is the research phase, this is the development phase, right? So 2700 is required to be expensed off in the P&L because this met the development criteria on 1st January 20x2, right? Okay. And the amount estimated to be recoverable from the process is 1000. So what is the value of intangible asset under development? What is the value of the intangible asset under development? इसकी वैल्यू क्या होगी?
1000.
नहीं, आपने एक्चुअल में स्पेंड कितना किया है? सो इंटेंजिबल एसेट
Spend 900, but fair value जो amount estimated to be recoverable is 1000, no? So is it a fair value, no?
No. So first of all, fair value method is allowed in case of government grant. It is allowed in case of business combination. But when you are developing intangible asset, when you are acquiring intangible asset, it has to be measured at cost, right? Initial measurement.
Okay. Yeah, okay.
तो cost पे तो करोगे ना?
Yes.
So just think about why this question is given you fair value. There is some logic behind that. The logic is not कि अगर fair value दिया है तो उसी पे कर दो. आप जो खर्च कर रहे हो, that is the accounting entry which you will pass. Initial recognition will always happen at cost, right?
Yes.
So only in case of government grant and in case of business combination, because in case of business combination, you are paying the price as per the consideration which you are paying, right? And consideration is on the basis of fair value in case of business combination. Okay.
Okay.
So the production process met the intangible asset recognition criteria for development on 1st January 20x2. The amount estimated to be recoverable from the process is 1000. It means 2700 has to be charged to the P&L. 900 is the intangible asset under development, and the recoverable value is 1000, which is more than 900. It means there is no impairment, right? There is no impairment. Yes or no? Because recoverable value is higher than the carrying value, higher than the carrying value, right? Expenditure incurred for development of the process in financial year 2022-20x3 in the next year is 6000. Asset was brought back into use on 31st March 20x3 and is expected to be useful for 6 years. Expenditure incurred for development of the process in financial year 2002x3 is 6000. So again, it will be added to the development cost. It will be added to the intangible asset under development. Abhi development phase chal hi raha hai, okay? In the last year, up to 31st March 2, it was 900. So now this 6000 rupee will also be added to the intangible asset under development. So what is the value? What is the carrying value of intangible asset under development?
900 in 2002 and 6900 in 2003.
So what is the total expenditure during the development phase?
6900.
6900. Okay. And this asset was brought into use. This asset is available for use on 31st March 20x3. And the life is also given for 6 years. So what is the relevance of this information? Amortization. The relevance of this information is on 31st March 20x3, you will capitalize this intangible asset. So first, in the development phase, what is the accounting entry you will pass? You will pass intangible asset under development account debit to bank account. And when you will capitalize, What accounting entry you will pass? Intangible asset account debit to intangible asset under development account. वो CWIP और PP याद है ना आपको? Capital work in progress to tangible asset. Yeah?
Yes.
पीपी में भी क्या होता है, जब कंस्ट्रक्शन होती है, जब डेवलपमेंट होती है, तो फर्स्ट अकाउंटिंग एंट्री हैज टू बी रूटेड थ्रू सीविप, कैपिटल वर्क इन प्रोग्रेस. When the asset becomes available for use, then PP account will get debited and CWIP will get credited, right? So likewise, intangible asset will be debited on 31st March 20x3 and intangible asset under development will be credited. Okay. And the total value of intangible asset is 6,900. Useful life is 6 years. What is the amortization? In the next 6 years, what is the amortization in the next 6 years?
1150.
1150. So what is the requirement of the question? What is the carrying amount of the intangible asset as on 31st March 20x2 and 31st March 20x3? Also determine the charge to profit or loss for 20x1 and 20x2. So question is asking you 3 information. What is the profit or loss which has been recognized? What is the charge in the profit and loss in 20x1, 20x2? So 2001-2 में profit and loss में क्या charge गया है?
2600. 2700.
2,700. The amount is spent on the research phase, right? And what is the charge? And what is the carrying value of intangible asset on 31st March 2002? 2 में carrying value कितनी थी?
900.
900. And 3 में कितनी है? 6,900.
6,900.
6,900. So in 2003, 6,900. And what will be the carrying value in 2004? अब capitalize हो गया 31st March 2003 पे. Now you have to amortize. What is the carrying value on 31st March 2004?
5750.
1150.
6,900 minus 1150. So which means 5750, right?
Yes, sir.
5750.
Yes.
Now one more information is given. As on 31st March 2004, the amount estimated to be recoverable from the process is 5,000. The carrying value is 5750. The recoverable value is 5,000.
Loss. Impairment loss.
Impairment loss. Impairment loss of 750 in 2004, right? Determine the carrying value of intangible asset on 31st March 2004 and the charge to profit or loss on account of impairment loss. The question itself has given you the answer, right? While every time you will not get this kind of hint or this kind of answer, okay? So what is the expenditure to be transferred in P&L in 1-2? Total expenditure 3,600. Expenditure during the development phase 900. 2,700 is the research phase expense. Carrying amount of intangible asset as on 31st March 2002. Expenditure during development phase will be capitalized. It is 900. Recoverable amount is higher, being 1,000, and hence no impairment. Carrying amount of intangible asset on 31st March 2003. So carrying amount of intangible asset in 2002 900, spent during the year 2003 6,000, and total expenditure is 6,900. This is going to be capitalized. Expenditure to be charged to P&L in 3-4. What is the opening balance of intangible assets? 6,900. Amortization 1150. Carrying value 5,750. Recoverable value 5,000. So amount charged to P&L 750. What is the carrying value of intangible asset as on 31st March 2004? The value of intangible asset will be recoverable amount, that is 5,000. Okay. Is that clear? We have already solved the answer.
Yes, sir.
Okay. Clear or clear?
Clear in mind, sir.
Clear in mind. Very good. Yes. So this was on the internally intangible asset through exchange. Intangible asset through exchange. Okay, so friend, this is how we have completed the mode of acquisition of intangible asset. The mode of acquisition of intangible assets. Okay. And we discussed that how to measure intangible asset when it is required through separate acquisition, business combination, government grant, exchange of asset, internally generated goodwill, internally generated intangible asset, right? This is what we discussed. Now, friends, coming to the subsequent measurement. Okay. So before that, let me solve one more question before that. Let me solve one more question. Question number Question number 4. Okay, question number 4. This question number 4. This question number 4 is a study material question, and this question number 4 is on my my presentation also. I hope my presentation is visible. I
Yes,
hope
sir.
it is visible. Yeah. X Pharmaceutical Limited's require your opinion in respect of following accounting transactions. In respect of following accounting transaction, right? This company acquired a 4-year license to manufacture a specialized drug at a cost of rupees 1 crore. At the start of the year, production commenced immediately. Right? So this company acquired a 4-year license to manufacture a specialized drug at a cost of rupees 1 crore. At the start of the year, production commenced immediately. So what is the treatment of this transaction? This company has acquired a 4-year license. What is the treatment of this transaction?
License debit to bank.
License intangible asset debit to bank 1 crore rupees. So this license has to be capitalized as an intangible asset, and this is a case of separate acquisition. So it should recognize the drug license as an intangible asset because it is separately purchased. It is identifiable. Okay. So it has to be recorded at 1 crore rupees. Very good. Second transaction. It also, X Pharmaceutical Limited also purchased another company at the start of the year. As part of that acquisition, X Pharma Limited acquired a brand with a fair value of rupees 3 crore based on the sales revenue. The life of the brand is estimated at 15 years. What to do?
Brand purchase to bank. First transaction. On acquiring.
Since you are acquiring this company, so you are acquiring the value, you are acquiring the brand also, you are paying for this brand, right? So just think about why you are paying this company extra, because you are paying for the brand value also. Since you are paying, you will capitalize this brand, right? So what will be the accounting? This brand has to be capitalized. It should recognize the brand as an intangible asset because it is a part of the acquisition and it is separately identifiable because the company is paying a premium for that. So this brand has to be capitalized at 3 crore, brand account debit to bank account. Okay. Because the to purchase consideration basically, and that purchase consideration includes this brand. This brand has to be recorded at fair value of 3 crores. And this brand is going to be amortized over a period of 15 years. So every year you will amortize 20 lakh rupees. Simple. The first question was for separate acquisition. The second part was for business combination, acquisition of a company. Third, spent rupees 1 crore on advertising campaign during the first 6 months. Subsequent sales have shown a significant improvement and it is expected that this will continue for 3 years. The company has spent into the advertisement cost. Okay. The company has incurred some advertisement cost. And after this advertisement cost, the company's sales revenue has significantly improved. And it is expected to improve in the next 3 years. So whether this advertisement expense is required to be capitalized?
No. It's a promotional expense. It is a promotional expense.
It's a business promotion expense, first of all. Second, the company does not have a control. It is not a separately identifiable. The company cannot sell this advertisement expense to Abrakesh. The company cannot sell. I mean to say, for example, I spent 1 crore rupees on my advertisement, right? So I cannot say that, listen, I have spent 1 crore rupees on my advertisement. Will you buy that or for 60 lakh rupees? Answer is that is my advertisement, right? So it is not a controllable resource. It is not identifiable separately. So this will be recognized as an expense. This 1 crore rupees of advertisement expense will be recognized as an expense. Okay. 4. It has commenced developing a new drug, drug A. Drug means medicine, salt. The project cost would be 10 crore, 100 lakhs. Clinical trial proved successful and such drug is expected to generate revenue over the next 5 years. So this company has developed a drug. And what was the project cost? The project cost was 10 crore. And the clinical trial has proven that it is successful and this will generate revenue also in the next 5 years. Cost incurred up to 31st March 20x1 is 5 crore. Balance cost incurred in 2001-2 is rupees 5 crore. What is the accounting treatment of this transaction? Give me the accounting entries also. Give me the accounting entries also. What is the accounting entry in the year 2001?
Intangible asset debit 5 crores. 2 bank.
Intangible asset under development account debit to bank 5 crore. What is the entry in 1-2?
Actually, clear debt has not been mentioned that when trial has been proved successful.
So nothing is given. So we will assume that this project cost is 10 crore and this is after, this entire money belongs to development phase.
Okay.
Okay. We will assume that only. And if you want to write an assumption for that, you can write that. Because otherwise, how will you allocate that what is the amount in the research phase and what is the amount in the development phase? So we will assume once this has been successful, right, then only this 10 crore has been spent.
Sir,
So
but
what is the,
sorry, please complete.
yeah, what is the accounting entry in 1-2? In 1-2, the accounting entry is again intangible asset under development account debit to bank account 5 crore. What is the last entry? Intangible asset account debit 10 crore to intangible asset under development 10 crore. Yes, Abhrakesh.
Sir, earlier, while explaining this research phase and development phase, it was there that if it is not possible to separate it out, what is the research phase and it is development phase, then we should debit it to as a research phase and debit it to P&L. So here it is not the same case.
No, it is not the same case. Why? Because in the question, it is specifically
successful.
mentioned in the question.
Successful.
The clinical trial proved successful. Means you have now the salt of the now you know the formula, the salt of that virus, right? You know that if I'll apply this Dolo 650 mg, your fever will come down. Now the clinical trial has proved successful,
Okay.
right? And this drug is also expecting the future economic benefit. So tell me when it will expect future economic benefit, when you are sure and certain, right?
Okay.
So let's say if this line would have missed in this question, agar ye line nahi hoti, and this information has been given only. And the last line which was given is, let's say, the company is not able to distinguish whether it is a research phase or development phase. Then you can take entire money to the research phase expense, right? But here it is written that it proved successful and this will also generate future economic benefit for the next 5 years. You will be able to determine the future economic benefit also. Right? Okay.
Thank you.
So this is what the question is expecting from all of you, right? So the intangible asset under development in the first year is 5 crore, in the second year is 5 crore, and then intangible asset will be capitalized at 10 crore and it will be amortized for next 5 years. Okay. If the future economic benefit is 5 years, it will be amortized for next 5 years. Last, it has also commenced developing another drug B, another salt. It has incurred 50 lakh towards research expenses till 31st March 20x2. The technical feasibility has not yet been established. What is the accounting entry?
Full to P&L.
P&L.
This is entire research phase expense and this entire money has to be taken to P&L. Entire money has to be taken to P&L. This is what it is written here. Right? Clear?
Yes, sir.
Yes, sir.
So this is the question which we have completed. Right? Question number 4. On multiple mode of acquisition of intangible assets. Okay. So we completed question number 1, question number 2, question number 4. Since morning, what we have completed? We have completed this question number 1 on through intangible asset through exchange of asset. Question number 2 on internally generated intangible asset. Question number 3 will do. Question number 4 on multiple mode of acquisition of intangible asset. Question number 5 on intangible asset acquired by way of business combination. Right? So these are the questions we have covered. Question number 6 we will be covering. Yes. Just a minute. Yes. Question number 6. Let's cover question number 6 here only. Question number 6. One of the senior engineer of XYZ has been working on a process to improve manufacturing efficiency and consequently reduce manufacturing costs since 1st April 2005. So this engineer is working on a project to enhance the efficiency of manufacturing process. Okay. This is a major project and has full support of the company's board of directors. ये जो लाइनें है ना, ये लाइनें ऐसे दी जाती हैं कंफ्यूज करने के लिए, right? And at times there are the meaning which are hidden in these lines also. This is a major project and has the full support of XYZ board of directors. The senior engineer believes that the cost reductions will exceed the project cost within 24 months of their implementation. That the cost reductions will exceed the project cost within 24 months of their implementation. So when this project will be implemented, the cost reduction is much more than whatever will be the cost to implement this project. Okay. And they are saying within 24 months, the company will be able to recover the project expenses. Okay. Means the benefit will be, the future economic benefit will be more than the cost incurred. Regulatory testing and health and safety approval. Regulatory testing and health and safety approval was obtained on 1st June 2005. Okay. So the date of 1st April is given and this company is spending money on a process improvisation since 1st April 2005. And the testing and health and safety approval was obtained on 1st June 2005. This removed uncertainties concerning the project, which was finally completed on 20th April 2006. Okay. So what is the relevance of this line? That these approvals were obtained on 1st June 5 and project was completed on 20th April 2006. What is the relevance of these lines? इसका relevance क्या है?
To decide research phase and the development phase, but this is an internally generated asset.
हाँ ठीक है. So it doesn't matter. Internally generated intangible asset has to pass through research phase and development phase, right?
Yes.
So only internally generated goodwill, brand, market share, these are not required to be capitalized. But this is an internally generated intangible asset.
Okay.
Right? Okay. No, but what is the relevance of this 3 dates? 1st April, 1st June and 20th April.
Research phase and development phase.
Huh?
And
From 1st June, it will be capitalized till
1st April X20 X5, then 1st June 20 X5, then what is the date? Date is 20th
April 2006.
April 20 X6. These were the 3 dates. This is the date when expense started. Expense project started. This is the date when development phase start. Yes or no? Yes or no?
Yes.
और रेगुलेटरी अप्रूवल वगैरह आ गया ना,
Yes, sir.
राइट? लिखा है ना that the regulatory approval and safety approval was obtained. Okay. Development phase started. 20th April 6. Development
Production.
completed. Development completed. Right? Development completed. So is that clear? So it means this phase from 1st April to 1st June, this phase is for what? This phase is for what?
Research.
This is the research phase. This is the research.
Yes.
And this from 1st June it is, from 1st June it is development phase. This is what? This is development phase, this is research phase, right? ये clear है?
Yes, sir.
Yes, sir.
So what to do in the research phase? Where the money will go, where the spent will go? P&L. And here, capitalized. Okay. So let's read further. The cost of 18 lakh incurred evenly during the year till 31st March 2006. From 1st April 2005 to 31st March 2006, 18 lakh rupee cost has been incurred. So what is the monthly cost?
150.
150. And it is written that cost of 18 lakh incurred evenly during the year have been recognized as an intangible asset. So what is my cost? My cost is 1.5 lakh, right? 1.5 lakh per month. So this entire money has been recognized as this entire money has been capitalized. So is that right?
No. 3
So-
lakhs will be P&L and 15 lakh will be intangible.
Yes. So 2 month means 3 lakh. 3 lakh amount has to be charged to P&L and 15 lakh has to be transferred to intangible asset under development, right? Intangible asset under development. Okay. 15 lakh. An offer of 7,80,000 for the new developed technology has been received as a potential buyer, but it has been rejected by XYZ. Okay. Is there any relevance for this line? Let's read further. Utkarsh believes that the project will be a major success and has the potential to save the money of rupees 12 lakh in perpetuity. Utkarsh believes that. This should be not Utkarsh, this should be the company. The company believes that. The company believes that the project will be a major success and has the potential to save money of rupees 12 lakh in perpetuity. Director of Research at XYZ Neha, who is a qualified electronic engineer, is seriously concerned about the long-term prospect of the new process, and she is of the opinion that the competitor would have developed new technology at the same time, which would require to replace the new process within 4 years. Okay. She estimated that the present value of the future cost saving will be 9,60,000 over this period. After that, she thinks that there is no uncertainty about its future. Lot of values are given. Lot of values are given. Right. Lot of values are given. What to do with these values? क्या करें? See, what is the value of this intangible asset on 31st March 2006? What is the value of this intangible asset? 31st March 2006 पे वैल्यू क्या है? कैरिंग वैल्यू क्या है इंटेंजिबल एसेट की? भाई आपने अभी 18 लाख रुपए के खर्चे का बताया था ना?
15 lakhs.
15 lakh. 15 lakh.
15 lakh ना? 15 lakh is the actual money spent on the development phase. On 31st March 6, sorry, on 31st March, yes, 6, the value of this intangible asset is 15 lakh, the carrying value, right? So this cost of this have been recognized, an offer of 780. So whatever this company has developed, the market participants are offering a value of 780. What does it mean?
Impairment.
It means that the
Recoverability.
value of 50 lakh, the people are only ready to give 7.8. Okay?
Market value.
But impairment comes into picture when your recoverable value is lower than the carrying value. And recoverable value is higher of fair value less cost to sell and value in use. Okay. So this company got a price quote from a buyer for 780, which the company has rejected. Why? Because the company believes that the company has the potential to save the money in future, which is too big, right? Which is too big. Okay. And the company says that this 12 lakh rupee, the company is saying that the company has a future cost savings of more than 12 lakh in perpetuity. So it is way more than 7.8 lakh, and the company has computed the present value of this benefit, 12 lakh benefit in perpetuity, is 9.6 lakh. So fair value less cost to sell is 7.8 lakh. Value in use is 9.6 lakh. What is the recoverable value? What is the recoverable value? Recoverable value is higher of fair value less cost to sell and value in use. So what is the recoverable value?
9.6 lakh.
9.6 lakh. What is the carrying value?
15 lakh.
15 lakh. What is the impairment loss?
5 lakh 40,000.
5 lakh 40,000. So question is asking, advise the appropriate accounting treatment of the aforesaid issue for the year ended 20x6. I think the question and answer is crystal clear now, right? It is crystal clear now. Let me read the answer for all of you again. Ind AS 38 intangible asset requires an intangible asset to be recognized if and only if certain criteria are met. Regulatory approval on 1st June was the last criteria to be met. The other criteria have been met as follows. Intention to complete the asset is apparent as it is a major project with full support from the board of directors. Finance is available as resources are focused on the project. Cost can be reliably measured. Benefit are expected to exceed cost in 2 years. Since the project was completed on 20th April 2006, on 31st March, the amount of 15 lakhs should be capitalized in the balance sheet for the year ending 31st March 2006, representing expenditure since 1st June 2005. The expenditure incurred prior to 1st June, which is 3 lakh, should be recognized as an expense. Retrospective recognition of expense as an asset is not allowed. Okay. Okay. सो अगर आपने गलती से कैपिटलाइज कर दिया तो उसको एक्सपेंस ऑफ तो कर सकते हो, लेकिन गलती से एक्सपेंस ऑफ कर दिया तो दोबारा कैपिटलाइज नहीं कर सकते. ओके, विल यू बी एबल टू रिमेंबर दिस?
Yes, sir.
Ind AS 36, impairment of assets requires an intangible asset not yet available for use to be tested for impairment annually. The cash flow of 12 lakh in perpetuity would clear that have a present value in excess of 12 lakh, and hence there should be no impairment. However, the research director is technically qualified, so impairment test should be based on our estimate of 4-year remaining life, and present value of the future cost saving of 9.6 lakhs should be considered in that case. 9.6 lakh value in use is greater than the offer received, which is fair value less cost to sell of 780, and hence 9.6 should be used as a recoverable value. So the carrying amount should be consequently reduced to 9.6 lakh. Your carrying amount is 15 lakh, recoverable amount 9.6 lakh, impairment loss 5.4 lakh. This 5.4 lakh has to be recognized in the profit and loss. What is the accounting entry? The following accounting entry is required to correct the books of accounts. Operating expense, research phase expense account debit 3 lakh, operating expense impairment loss 5 lakh 40, and the intangible asset under development 8 lakh 40,000. This is the accounting entry. Is this entry clear to everyone?
Yes, sir.
Sir, in case of 7,80,000, how we are deciding that it is a fair value less cost to sell? Because it has been offered by a buyer. What is the benchmark for?
Fair value is a market value, right? And what is the definition of a fair value? Fair value is a price on which a party is ready to buy that product.
Okay.
So the customer, the buyer,
Yes.
is paying a price of 7.8 lakh. That is a fair value. What is the value in use? When you are using the asset, what the value you are getting by using, right? The
Yes.
cash flows. So that is 9.6 lakh. Okay.
Okay. Thank
We
you.
completed question number 6 also.
सर वो
Now let me
एक
take you to the standard again. Let me take you to the standard. Then we will
सर
be
वो हेलो हाँ सर वो एक लाइन का मीनिंग समझाओगे एक्सप्लेन करोगे बेनिफिट्स विल एक्सीड द कॉस्ट वहाँ पे नीचे था जस्ट
which one?
सर इसी क्वेश्चन में एक पॉइंट है ना कि बेनिफिट विल एक्सीड द कॉस्ट
This one?
नीचे
Question number.
हाँ नीचे थोड़ा हाँ इसका आंसर में थोड़ा नीचे आइए सॉल्यूशंस पार्ट सर
Yeah, the
सॉल्यूशन
senior
पार्ट नीचे
engineer believes that this one.
हाँ कॉस्ट रिडक्शन विल एक्सीड द प्रोजेक्ट कॉस्ट विद इन
So basically, it is saying that. So they are giving you an indication that the development phase has started on this 1st June. So basically, they are saying that the company is sure shot about the technical feasibility. Okay. So the company is saying that whatever the company is spending in terms of intangible asset, in terms of developing a project, right? So whatever spent is there, whatever money has been expensed, the company will be able to get more than the company will be able to get the benefit which is more than the money which has been spent, right? So this is just indicating you that the technical feasibility is there, the company will have the future economic benefit also. Okay.
ओके सर थैंक यू
Now let's come to the, yes. I hope my PPT is visible. So friends, just like PPE, the subsequent measurement on the reporting date. So intangible assets are also required to be measured at cost model or revaluation model. Now you guys are aware about the cost model or revaluation model. In cost model, the carrying value is determined by what? By cost minus accumulated amortization minus accumulated impairment loss. This is your carrying amount. So the company can choose either cost model or revaluation model as its accounting policy. But whatever model the company will choose, the company has to apply that model consistently to a particular class of asset. Consistently for a particular class of asset, right? Is that clear? You understood meaning of class of asset, like software is one class of asset. Patent, copyright, formula, okay, goodwill. These are the class of asset. For example, the company has 5 software and the company has opted for a revaluation model for the software. So in this case, the company has to apply the market value or fair value or the revaluation model for all the 5 software in that class. But let's say the company has only market value or fair value only for the 4 software. For one software, the fair value is not clearly identifiable. In that case, what will happen? In that case, what will happen? What will happen in that case? Standard says that when you are opting a revaluation model or a cost model, apply it consistently for all the assets within the same class. But if you are opting for a revaluation model, okay, you need to again apply the revaluation model. You have to identify the fair value for all the asset in that particular class. But if a particular asset does not have a fair value, you can continue that asset at a cost, even though for other assets you are opting for a fair value model, revaluation model, right? अगर 5 सॉफ्टवेयर है आपके पास, 4 की फेयर वैल्यू, आप 4 को फेयर वैल्यू पे कर लो, एक का फेयर वैल्यू आइडेंटिफिएबल नहीं है, सो यू कैन कीप दैट एसेट एट कॉस्ट आल्सो, राइट? दैट इज एन एक्सेप्शन. What is a revaluation model? The company can, after initial recognition, the company can bring the asset at fair value on the revaluation date. What is the carrying amount formula? Same like PP&E. सिर्फ डेप्रीसिएशन की जगह अमोर्टाइजेशन वर्ड आ गया, बट सेम है. Revalued amount on the date of revaluation minus subsequent accumulated amortization minus subsequent accumulated impairment losses is equal to carrying amount. For revaluation under Ind AS 38, fair value shall be determined by reference to an active market. If single item of intangible asset is revalued, then entire class of intangible asset to which that item belongs should be revalued. Class of asset means grouping of asset of a similar nature and use in an entity's operations. Okay. Same slide of PP&E. Valuation need not to be performed every year or every reporting period. If you have opted for a revaluation model, you are not required to revalue every year. You have to revalue at sufficient regularity, right? Where movement in fair value are volatile and significant, right? Then you have to do regular. Otherwise, you can revalue it within a frequency of 3 to 5 years, right? This is what which is given for revaluation model. Okay. Any question here? Any question?
So that exception for same class of assets for at the time of revaluation is only for intangible asset or for
it is
PP
only
also?
for intangible asset, because intangible asset by nature is kind of an asset which is not having a physical existence, right?
Yes.
So at times they don't have a fair value. Okay.
Yes.
And that is why the standard has categorically mentioned that.
Okay. Thank you, sir.
But what happened if you apply the revaluation model for all the asset of a particular class of PPE, but there was one asset in PP&E in that class also, that asset does not have a fair value? What happened with that? तो क्या होगा? Because PP standard में तो है नहीं, तो fair value कहाँ से लेके आओगे?
In that case, same type of asset is available in the market and we should take that value.
So you have to try all your best efforts to identify at the fair value. If not, then you can apply an analogy with the intangible asset standard. Okay, you can apply an analogy. Analogy means similar treatment to intangible asset standard. Okay, but before that you have to put all your efforts, like you mentioned, what is the value of the similar asset, how we can arrive at that price. Okay, so you have to do all those aspects. Same slide I have copied from PP&E. If you guys have attended the revisionary class on Ind AS 16, probably the look and feel, the color and the slide is same of PP&E. So intangible asset was revalued. For example, there was a software of rupees 1 lakh, right? The carrying value was 1 lakh and it was revalued at 1.25 lakh. What is the accounting entry for that? What is the accounting entry for that? It was revalued at 1.25 lakh. Accounting entry तो बता दो, 1 लाख रुपए carrying value है intangible asset की.
Intangible assets account debit to revaluation reserve.
Intangible asset account debit to revaluation reserve. Where revaluation reserve? In OCI.
In OCI.
Intangible asset account debit 25,000 rupees to revaluation reserve 25,000, being intangible asset revalued. In the next year, this 1.25 lakh become 1.05 lakh. There was an impairment loss due to which the value of the intangible asset got reduced. What is the accounting entry in the next year?
Revaluation reserve account debit.
Revaluation reserve OCI account debit to intangible asset 20,000. 20,000. In the next year, Now this 1.05 lakh become 95,000. What is the accounting entry in the next year? The carrying value becomes 95,000 in the next year. What is the accounting entry?
Revaluation reserve account debit. P&L
Yes.
account debit.
Revaluation
So-
reserve OCI account debit by what amount?
5,000.
Then impairment loss P&L account debit 5,000 to intangible asset 10,000. Correct? Okay. Now vice versa. The intangible asset was acquired at 1 lakh rupee. The carrying value of the intangible asset was 1 lakh rupee, and the fair value of intangible asset becomes 80,000 rupees. First time when the company done the revaluation, the value becomes 80,000 rupees. What is the accounting entry, Abarkesh?
Impairment loss debit to intangible asset.
Impairment loss P&L account debit 20,000 to intangible asset 20,000. Being intangible asset revalued and impairment loss booked. Next year, so the carrying value was 80,000. Now the carrying value become 95,000. What is the accounting entry in the next year?
Intangible asset debit 15,000 to impairment loss. How much was
Yes.
that?
So basically impairment gain आ जाएगा. There will be a gain, impairment loss reversal in the P&L.
Yeah.
So other income आ जाएगी. Yes. So intangible asset account debit 15,000 to impairment gain 15,000 in the P&L. So in the next year from 95,000 it become 1,05,000. Now what is the accounting entry in the next year?
Intangible asset account debit 20,000 to reversal
10,000.
of
From 95 it become 105. 10,000.
10,000 to reversal 5,000 and to revaluation reserve OCI 5,000.
Very good. So intangible asset debit 10,000 to impairment gain in P&L 5,000 to revaluation reserve OCI 5,000. Okay. Yes, friends, this was the revaluation gains and losses accounting treatment. Now, whenever there is a revaluation surplus, what is the accounting treatment of that revaluation surplus? There are two treatment. Number one, when the asset is derecognized, right? So you can transfer all the revaluation reserve to retained earning when the asset will be derecognized. Second, you can also transfer the revaluation surplus reserve to retained earning on a continuous basis during the life of the asset, right? And what is that amount? That amount is difference between the depreciation based on the revalued carrying amount and the asset original cost. So since you have revalued, that is why there is a revaluation reserve, okay? And this revaluation reserve has increased the value of the asset. Since the value of the asset has gone up, your amortization cost has also gone up, right? So your revised amortization cost minus your existing amortization cost, the difference is depreciation. So to the extent of this amount, you can transfer your revaluation reserve to retained earning to the extent of this amount, right? This was the accounting treatment. Exactly same accounting treatment which we have discussed in property, plant and equipment standard. Okay. Important. Useful life. What should be the useful life of intangible asset? Right. Very important. Why? Because it does not have a physical existence. Useful life could be of two types. Either it could be finite or it could be indefinite. Useful life could be finite or it could be indefinite. For example, you have done the business combination and you have recognized a goodwill and you don't know by how many years, up to how many years you will get the future economic benefit from that goodwill, whether the life is finite or indefinite. The life is finite or indefinite.
Indefinite.
This is an indefinite life, right? because you're not sure. You're not sure. It is an indefinite life. If the life is indefinite, then will you be able to amortize? Will you able to do the amortization?
No, no.
No, why? Because denominator is not there. How will you amortize? So in that case, standard says that when the life is indefinite, you need to, you are not able to amortize, but you will check for impairment losses. You will do the impairment testing at least once in every year. Okay. And you will also evaluate whether the indefinite life becomes a finite life or not, right? Whether the indefinite life is converted to the finite life or not. For example, after 2 years, the company is able to evaluate, yes, I will be able to get the future economic benefit only for the next 2 years. It means now the life becomes finite. So now whatever is the carrying value, it has to be amortized for the period of 2 years. So this was the concept of indefinite life. Now coming to the finite life, useful life. Standard says that useful life of intangible asset arises from contractual or other legal rights. And it should not exceed the period of the contractual or other legal right. For example, the company has acquired a license from Government of India, and the contractual life of the license is 10 years. What is the useful life?
10 years.
10 years. It should not exceed the period of contractual or other legal right. The Government of India has given a license for 10 years, but the entity expects that I will not be able to receive the future economic benefit for more than 8 years. For more than 8 years. In this case, what should be the useful life?
8 years.
8 years.
8 years. So useful life can be shorter than the contractual and legal rights, but useful life cannot exceed than the contractual or legal right. Right? So Government of India, आपको जरूरत 8 साल के लिए है. You need the license only for 8 years, but Government of India is not giving the license for less than 10 years. So 2 years is a waste for you. Have you purchased any medicine ever in your life? I'm sure
Yes.
all, right? So when you went to buy a medicine to a medicine shop and you asked, give me only 4 tablet. Give me only 4 tablet of paracetamol. I'm just giving an example. What the shopkeeper will say?
Full pack आएगा.
Full pack आएगा. Yes, very good. The shopkeeper will say that we are selling only full strip. We cannot cut this 4 tablet, and I'll give you only the complete full strip. But the doctor has suggested only 2 tablet twice in a day, and it is only for 2 days. You need only 4 tablet. And he is giving you 10 tablet, strip of a 10 tablet. So what is the contractual thing? 10. What is the future economic benefit from which you are expecting? 4. Right? Likewise, in the license, government is given for 10 years, but you are expecting to receive the benefit only for the 8 years. So useful life is not 10 years, useful life is 8 years. Okay. Is that clear? If
Yes.
the renewal clause is there in the license also. Okay. And so you can also consider the renewal period if it is substantiated through an evidence that the renewal will also happen without any significant cost. Okay. So then renewal period can also be considered as a useful life. Okay. So friends, useful life for an intangible asset, I told you it can be finite, it can be indefinite. If the life is finite, there is a limited period benefit. I mean to say that the set benefits are there. Amortization required if life is indefinite. No foreseeable limit to which the period over which the asset is expected to generate inflows to the entity. Amortization is not required. What is required? Impairment testing is required. You need to do the impairment testing. Okay. You need to do the impairment testing. Okay. So what is meant by amortization? Amortization means allocation of the depreciable amount of intangible asset with a finite useful life on a systematic basis over the useful life. Amortization begin when the asset is put to use. Yes or no?
Yes. No.
No.
For available for use.
When the asset is available for use, not put to use, when asset is available for use. Put to use concept is in income tax. Amortization stopped. Amortization stopped when the asset is either classified as held for sale or asset is derecognized. It is actually sold off. Okay. What are the method of amortization? There are three methods. You remember I told you in PP. Three method. Which three method?
Straight line, reducing balance, and weighted average.
Straight line method, WDV method, and straight line method, SLM, WDV method, and unit of production method, or it is also called as usage method.
Yeah.
It is also called as usage method, right? It is also called as usage method. Okay, clear? So amortization method used shall reflect the pattern in which the asset future economic benefit is received. For example, if the entity expects that the future economic benefit is constant, then what is the relevant method? What is the relevant method then?
Straight line.
Straight line method. If the entity expects that the future economic benefit is in the reducing sense, then reducing balance method, WDV method, right? WDV method. Okay. And if it is on the basis of usage, then
unit base.
Unit of production method. Okay. So if pattern cannot be determined reliably, straight line method is required to be used. Amortization charge for each period shall be recognized in P&L unless this or another standard requires it to be included in the carrying amount of another asset. For example, if the intangible asset, for example, let's say, the amortization has to charge to the P&L. But let's say one intangible asset, software, is used for development of another asset. Let's say software is used for the development of another asset. So the depreciation for that period for the software will be, the amortization for that period of the software will be taken to the cost of that asset, not to the P&L. Okay. मतलब एक एसेट को डेवलप करने के लिए अगर कोई भी कॉस्ट लग रही है तो सारी की सारी उस एसेट में कैपिटलाइज होती है, राइट? It has to be capitalized. Okay. So amortization period and amortization method, it has to be reviewed at least at each financial year end. I told you, na? Like in PP, I told you residual value, amortization method, amortization period. So likewise in India's also, in intangible asset also, this amortization period and amortization method will be reviewed at least at each financial year end. If the expected useful life of the asset is different from previous estimate, the amortization period shall be changed accordingly. Okay. And such changes will be considered as a change in estimate or change in policy.
Change in estimate.
Change in estimate. Change in estimate. And change in estimate has to be applied prospectively. Okay. Clear?
Yes, sir.
So friends, we discussed amortization method also. We discussed useful life concept also. Useful life is either finite or it could be indefinite. If it is indefinite, you need to check for impairment. And you need to also evaluate at the end of every year that whether my life becomes finite or not. Whether my life becomes finite or not. Okay. In case of finite life, what happened? You need to amortize. And what is the life? What is the useful life? It is a contractual life. It cannot go beyond contractual life. Okay. Number two, there are three methods of depreciation, amortization. So what are the method of amortization? SLM, WDV, unit of production method, right? Then my dear friends, amortization start when the asset is available for use and it will end when the asset is derecognized or classified as held for sale. Okay. So at the end of every year, you need to review what is the amortization period, means useful life, and amortization method, SLM, WDV or unit of production method. You need to review at every year. Whenever there is a change, this is considered as a change in accounting estimate. Okay. Now I'm taking you to the question number 5. I think we have not done question number 5. Sorry, question number 3. Let me discuss question number 3. Question number 3. X Limited purchased a patent right on 1st April 20X1 for 3 lakh, which has a legal life of 15 years. Okay. X Limited, what X Limited did? X Limited purchased a patent right on 1st April X1. The cost is 3 lakh. The cost is 3 lakh. What is the legal life of this patent? The legal life is 15 years. Okay. However, due to the competitive nature of the product, the management estimate a useful life of only 5 years. Whether life can be shorter than the contractual or legal life?
Yes.
Yes. Okay. So management believes that they will be able to get the benefit only for the next 5 years. Okay. Useful life only for next 5 years. So again, from the examination perspective, if you will not be aware about the concept that the life can be shorter than the contractual or legal life, and few students have made the mistake. When I say few students, so out of 100% student, probably let's say 20-30% students made a mistake and they have considered the life of 15 years. And I'm not concluding. I'm just telling you by reading this first 2.5 line. Okay. Straight line amortization is determined by the management to be the best method. What is the method they have given? SLM. Cost is given. Legal life 15 years, but the useful life is 5 years as per the management. Okay. And SLM is the method. And it was purchased on 1st April 2001. On 1st April 2002, means after 1 year, management is uncertain that the process can actually be made economically feasible. After 1 year, management is not sure that the process can actually be made economically feasible, right? It means probably this process will not be economically viable, and decide to write down the patent to an estimated market value of 1.5 lakh. So what they did? They reduce the carrying value of the patent. They revalue the patent at 1.5 lakh rupee and decide to amortize over 2 years. And they have also reduced the useful life. As on 1st April 2003, after 1 more year, having perfected the related production process, now the asset is appraised at a value of rupees 3 lakh. Now there is a reversal of impairment. Furthermore, the estimated useful life is now believed to be 4 more years. Again, the value has also increased and the life has also increased. Determine the value of intangible asset at the end of each financial year. Very good question on determining of useful life and on the change in the carrying value and change in useful life. Very good question. I hope you are able to understand the question. I hope you are able to understand the question.
Yes, sir.
Yes. Okay. Now, friends, what is the purchase price of this intangible asset, this patent? What is the purchase price?
3 lakhs.
What is the accounting entry? What is the accounting entry on the date of purchase?
Patent account debit to bank 3 lakh.
Yes. Patent account intangible asset debit to bank 3 lakh rupee. Now this has been purchased, and what is the useful life in this case?
5
5
years.
years.
What is the per year amortization?
60,000.
60,000.
So what is the carrying value on 31st March 20X2?
2,40,000.
2,40,000.
2,40,000. Okay. It is clear to everyone. But
Yeah.
So carrying value is 240. What is the recoverable value given in the question on 1st April? There was an impairment indicator.
1,50,000.
1,50,000.
1,50,000. Okay. So what is this 90,000?
Impairment loss.
Impairment.
P&L.
240 minus 90 will go to P&L. Now, what is your revised carrying value?
1,50,000.
1,50,000. And what was the life? What was the actual life? The life was
2
5
years
years.
now.
2
1 year
years.
is gone. But the remaining life, it also revised the remaining life 2 years. So what is the depreciation? What is the depreciation
75,000.
on 31st March 2003?
75,000.
So 150 divided by 2. Amortization is 75,000. What is the carrying value on 31st March 2003?
75,000.
75,000 is the carrying value on 31st March 2003. Sorry, on 1st April 2002, the value was 150. 75 was debited to P&L on in 2002, 2003. So what is my value? Yes. So what is my value on 31st March 2003? 75,000. What is the opening value on 1st April 2003? 75,000. Okay. Now what is the revalued amount of patent? What is the recoverable value of the patent on 1st April 2003?
3 lakhs.
Again it become 3 lakh. Again it become 3 lakh. Right? So what should I do? Should I take this entire 2,25,000 as a revaluation surplus?
90,000 to P&L should be met from P&L.
So first of all, carrying value is 225 and the revalued amount is 3 lakh. So 225 is the revaluation surplus. Okay. But this revaluation surplus of 225, 90,000 has to be credited to P&L because you have booked an impairment loss. And the remaining 1,35,000 will be credited to revaluation reserve in OCI. Right. So now this 1st April 2023, the value becomes 3 lakh. So how this 3 lakh is going to be amortized? In how many years? The
4
life
years.
is also revised.
4 years.
The remaining life is 4 years. What is the prospective depreciation? What is the prospective depreciation?
75,000.
75,000. So what is the net value as on 31st March 2004? 225. 3 lakh minus 75. On 2005, 150. On 2006, 75. On 2007, 0. Is this question clear to everyone? Is this question clear to everyone? So this question
Yes, sir.
is a good question which is testing your concept on useful life, in revaluation, and change in useful life. Okay. Useful life, revaluation, and change in useful life. Okay. Is that clear?
Yes, sir.
Clear or clear? Yes. So this part we discussed. So derecognition in intangible asset will be derecognized when it is actually sold off or when no future economic benefit is expected, right? So what is the amount of gain or loss? The amount of gain or loss is what? Your sale proceeds minus carrying value, and that will go to other income or other expense. It will not go to revenue from operations, right? So this is your entire, concept, and the 6 questions which I have covered from the revisionary questions which Board of Studies have given for the revision. Do you have any question, my dear friends? Do you have any questions? If you have not any questions, so let me discuss 3, 4, multiple choice question with you just to check your concept. So can I do that?
Yes, sir.
So just
Yes, sir.
allow me a second and let me check the concept if you're able to remember those concepts. Just allow me a minute. I'm opening that file. Yes, multiple choice questions. So I'm just sharing my screen. I hope the screen on multiple choice question is visible to everyone.
Yes, sir, visible.
Oh, answer is also there. Which of the following is not covered within the scope of Ind AS 38? Intangible asset held for sale in the ordinary course of business, asset arising from employee benefit, non-current intangible asset held for sale, all of the above.
All.
D, all of the above.
Abrikesh, what is your answer?
Same D, sir.
D. So this will be the inventory. This is Ind AS 19 employee benefit. This is 105 and all of the above, right? So all of the above is the right answer. Yes. An intangible asset is identifiable when? When? Tell me. When it is separable? When it arises from contractual or other legal rights? Either A or B applies, none of the above.
C.
Either A or B.
C. C.
Either A or B, right? Either it is separable or it is arising from contractual or legal rights. Okay. Yes. C is the right answer. Question number 3. AG Limited has purchased a computer with various additional software. These are integral part of the computer. Which of the following are true in the context of Ind AS 38? Recognize computer and software as tangible asset. Recognize tangible and intangible separately. Recognize computer and software as intangible asset. None of the above.
B.
These softwares are integral part of the computer.
A.
A.
Yes. So entire
Integral part.
amount has to be recognized as a PPE. Which of the following item qualified? Which of the following item qualify as an intangible? Just a minute. Which of the following item qualify as an intangible asset under Ind AS 38? Advertising and promotion cost, operating losses, college tuition fee paid to employee who decide to enroll in executive MBA program, legal cost paid to IPR lawyers to register a patent.
D.
D.
D. D. D.
D is the right answer. Yes. Question number 5. A newly set up .com entity has engaged you as its financial advisor. The entity has recently completed one of its highly publicized research and development project and seeks your advice on the accuracy of the following statement made by one of the stakeholders. Which one is true? Cost incurred during the research phase can be capitalized. Cost incurred during the development phase can be capitalized if criteria such as technical feasibility of the project being established are met. Training cost of technician used in research can be capitalized. Designing of jigs and tools qualify as a research activity.
B. B. B.
D.
B. B. B.
B for Bombay.
B for
B
Bombay.
for Bombay.
B for Bombay is the right answer. Yes. So cost incurred during the development phase can be capitalized if criteria such as technical feasibility of the project being established are met. Right? So B for Bombay is the right answer. Last question. AG Limited is developing a new production process. During 18-19 expenditure incurred was rupees 10 lakh, out of which 8 lakh was incurred before 1st January 2019 and 3 lakh was incurred between January and March 19. Okay. Expenditure incurred was 10 lakh, out of which, so basically it should be 2 lakh, right? It should be 2 lakhs. The company is able to demonstrate that at January 1st, 2019, the production process meet the criteria for recognition as an intangible asset. The recoverable amount of know-how embodied in the process, including future cash outflow to complete the process before it is available for use, is estimated to be 2 lakh as at 31st March 2019. So let me keep this 7 lakh and let me keep this 3 lakh. So 18-19 में टोटल एक्सपेंडिचर कितना हुआ? 10 lakh. उसमें से 7 lakh up to 1st January और 3 lakh between January and March. What is the relevance of this thing?
Research and development.
Research and
Development.
development. Yes.
Development phase.
Research phase expense is 7 lakh. Development phase expense is
3
development
lakh.
phase amount is 3 lakh. So 3 lakh is capitalized as an intangible asset under development. Okay. Recoverable amount is also given on 31st March 19, which is 2 lakh. What is the relevance of this line?
Market value.
Recoverable value is given. So intangible asset value was, carrying value was 3 lakh. Recoverable value is 2 lakh.
Impairment.
Impairment. This indicates impairment. So what is the carrying value of intangible asset at the end of the year? At the end of the year, पे carrying value क्या
2
होगी?
lakh.
2 lakh.
2 lakh.
2 lakh.
So carrying value is
lakhs.
equal to cost minus amortization minus impairment. So what is my cost? 3 lakh. Amortization is not there because it is still under development, but impairment is there for 1 lakh rupee. What is the right answer? The right answer is C.
2 lakh.
2 lakh is the right answer. Okay, C is the right answer. So thank you so much, friends. With this 6, multiple choice question also, I have covered this entire, intangible asset standard with 6 important questions and 6 multiple choice question as well, with my own examples to help you better understand the concept. Yes, Abrakesh.
So like in computer, we consider it as a tangible under PPE because it comes with the OS together. Now, why not for robot? Robot is a one physical structure and it cannot run without the software inside it.
So
why
that is why, so Abrakesh, that is why the entire robot has to be capitalized as an intangible asset.
same
right?
is the case with the PC, no? I mean, laptop
Yeah.
or
Yeah. For
earlier.
example, so Abrakesh, let me complete this. So let's say I have purchased my Lenovo laptop and it comes with the Microsoft Window. Okay. And few other software were also there in the computer. I mean to say laptop, which was integral part of this computer. So I have not capitalized my PP, I mean to say laptop and software separately. Whatever money I have paid to the Lenovo center, the entire 1 lakh rupee I have capitalized as a PP, which is computer, which is laptop.
Yes.
Likewise, I bought a software, I bought a robot and I paid 2 lakh rupees to robot who is cleaning my home, right? So I have capitalized this entire money which I have paid to purchase a robot as an intangible asset, right? I have not distinguished between tangible and intangible. So the entire robot is intangible, the entire laptop is tangible. Okay.
No, that is my question. Even robot is also a particular machine is a tangible, and it runs with the help of the software, like a laptop. So why?
Abrakesh, yeah, let me tell you, Abrakesh, what happened? So a lot of subjectivity will be involved in that case, right? How will you split? So, okay. So then you will need to go for market value, fair value. Okay. So then it becomes very judgmental. That is why to remove the complexity and to, just give the simplicity, because end of the day होगा क्या? आपका जो software है which cannot run without this laptop, that MS window comes with this laptop. You cannot remove MS window and install to the other, right? Because it comes with a key which is inbuilt in this laptop only. So when the life of the laptop will over, that MS window life will also get over. Number one. So that is one of the reason. Number two, that MS window cannot run without this hardware. Okay. So and the cost of the MS window is not significant in comparison to the cost of the laptop. Had it been SAP, ERP, for example, आपका Oracle भी के साथ आपने laptop लिया. So Oracle has given you a license. So that the license of the SAP, ERP, Oracle is way beyond, much more than the cost of the laptop itself. If it is highly significant cost, in that case you have to capitalize it separately. But if it is insignificant cost in comparison to the overall cost, number one. Number two, so that part is integral part of the other part. So you have to capitalize only one part as a cost of the asset.
Okay.
Okay.
Got
So
it.
this is the concept.
Thank you.
Yeah. So friends, thank you so much. Thank you so much for the wonderful learning and engagement and participation to understand this complex standard. Thank you so much and wish you a happy learning ahead, right? We'll meet again with a new standard. Thank you so much. Bye-bye. Take care.
Thank you.
Thank you very much.
Thank you,
Thank
sir.
you, sir.